Hi, I'd like to welcome everyone to Cooperative Federal's first home ownership pop-up webinar. Today's topic is kind of a general overview, and we're calling it Your Path. Over the next hour, we're going to explore major steps that you'll need to go through to be ready to buy a home, and how you can get help taking your next or your first steps. I'm Tom Dellwo. I'm a certified housing counselor with Cooperative Federal, and I'll tell you a little bit more about Coop Fed and myself once we get going. So let's dive in. So these are some of our lovely branches, and we have four locations. This is 3 of them around the city. We focus on the city of Syracuse because our mission is to rebuild the local economy, Syracuse's economy, in ways that foster justice, serve people and communities that are poorly served by mainstream banks, and responsibly manage our members' assets. So we really push hard on the foster justice and serving people that are underserved. That's who we are. That's why we have 4 branches located around the city of Syracuse to serve our members that don't have cars, to focus on helping rebuild communities by investing in home ownership and helping people start small businesses. We exist as an engine of economic development in Syracuse, which is a city that, has struggled over the years, and we hope to be part of its rise. Cooperative Federal is a community development credit union. We are not for profit, like all credit unions are, founded in 1982. We were started by community organizers here in Syracuse with a particular focus on divesting from apartheid South Africa, and our focus on justice has never stopped from there. It's only expanded on addressing injustices in other areas of our economy and our community. We are a HUD Housing Counseling affiliate, so we have a housing counseling program, and of course we're an NCUA insured and overseen by the federal government as a financial institution. Okay, so that's us in a nutshell, and we're going to talk a little bit more about, we're going to go into now our table of contents, so to speak. So first, we're going to talk about the trade-offs involved in ownership versus renting. We at Cooperative Federal really want to make it clear, and I think it's important to say at the outset that we don't feel that there's any one particular path that one should go on. There's no, getting your housing needs met is what's most important. So if you do that through renting, that's great. If you do that through homeownership, that's great. There are advantages to homeownership. There are disadvantages to homeownership. Same thing with renting. So we're going to talk about what those trade-offs are. We're going to talk about, we're going to dive right into that, actually. So I guess we'll just head straight into the trade-offs, and then we'll check back in on these contents as we go. All right, so trade-offs. Homes hopefully appreciate, so they'll hopefully go up in value over time. And so when you own a home, as you pay it off, you are freeing up more of the value of that home, and you can pass on the asset to the next generation if that's how you choose, or of course you could sell the asset and pass the dollars on to the next generation. So that's kind of one of the benefits of homeownership, is that there's this sort of appreciation. Your home's value rises over time, hopefully, and so you're able to kind of grow an asset while at the same time getting your housing needs met. There are advantages in terms of taxation. Mortgage interest is deductible if you itemize. There's more security and stability in that you are an owner of the property, and so it's more difficult for you to be removed from the property if, even if you fall behind on your mortgage. There are often options to help you stay in your home. And one of the things we offer as a housing counseling agency is support around potential foreclosure issues if those come up too. So it's not just on the front end getting you into the house, but also keeping you in the house that we're around for. So comfort, control, right, of your space, colors, changes, additions, all of that stuff. Those are all choices that you can make. And having lots of folks in a neighborhood be homeowners tends to mean that folks are longer term residents of the neighborhood tend to have more, I guess, a stronger connection to the neighborhood because of the investment in the home. And so those those folks, the neighborhoods that have higher levels of homeownership tend to have a little bit more stability. Of course, there's downsides. So the value of the home can fluctuate depending on where you buy. And that can that's not always in your control. You could have the greatest additions, wonderful conditions in your home, and still see the value of your property drop if the values of properties around you are going down. Repairs are expensive and can be time consuming and unexpected. And the maintenance is another issue, right? That's all on you. So fixing anything that breaks and kind of the conditions that you end up living in are a lot on you and require you to do a lot of that work. It can be more difficult to move. You can be a little bit, pulling up roots is a little more difficult because you do have to, if you have kind of two options. You can sell the home or you can rent it, and both options kind of take time to get in place. And it does tie up some cash. So you'll be putting down a decent chunk of cash for a down payment and also for closing costs. And so that cash is cash you can't use for other things. So those things are some of the downsides of homeownership. Talk a little bit about renting versus owning and why you might choose one over the other. So kind of a simple example, right? Scenarios in which you don't see yourself in a place for a long period of time, say more than 5 years, then it might very much make sense to rent, to keep your options open, your ability to move relatively quickly, your maintenance costs down, your all the not having to deal with kind of all of the things that go along with owning a home. Where you choose to buy, or you may be in an area where it's not affordable to buy a home, and more affordable to rent. Could be the other way around as well. And your current financial situation. So do you have the savings? What's your credit look like? We're going to talk about those other things as well, and kind of what you need to do to get ready on those fronts. And then of course your lifestyle. Do you want to manage a property? Do you want to do maintenance and repairs or deal with all that? Or do you want to live in a rental where someone else takes care of that? Hopefully takes care of that, right? If you have a good landlord. So that may not be something you're interested in, and that's okay. We're gonna look at a couple of scenarios because there are some sort of there's some number crunching you can do to see whether it makes more sense to rent or own in your area. So here's just a quick example. So this is from a tool provided by New York Times. We can add the links. This is assuming a $65,000 salary, gross household income, and some other factors. But bottom line, if you are looking at purchasing an $85,000 purchase price with 10% down payment and $2,000 in annual maintenance costs, and the property increases in value by 1% a year, and you plan to live there 7 years, then in this case, as long as you can rent something similar for $845 a month, then renting makes more sense. And this is a pretty complex calculation, and is just on the basis of these estimates, and kind of spits out a number as to what price of rental you would need to make renting more attractive. And we can look at another example. This is a scenario where the maintenance costs are higher, right? So the first example, the maintenance costs were $2,000. Second example, the maintenance costs are $4,000. In that scenario, you would need a rent. You would need rent to be lower than $1,000 a month in order to make it have more financial sense to buy. excuse me, to rent, sorry. So, and these are tricky because no one knows what their maintenance costs are going to be ahead of time. And so you do have to kind of decide what you want to do based on, you can use these tools, but these tools are often not so tools like this can be helpful to kind of give you a sense of what might be better financially, but they often fall short because you're always going to, you're never going to know exactly what these costs will be. Here's a scenario, the second scenario, right? So the first scenario was those two compared. This one is another scenario in which, and this is using a different tool at smartasset.com. So you can see that this has a slider for you, where if you slide it out for the length of time you plan on being there based on the criteria you put in, it will tell you how long you would need to stay in the house for buying to beat renting. And you can see that it changes with the purchase price. So if the purchase price is $100,000 in this scenario, you need to live in the house for 7 years before until buying pays off over renting. This one, with $120,000 purchase price, you need to actually be in the home for 13 years in order for that to pay off. So some of it does have to do with the length of time you plan on staying. Okay, we're gonna move on to our next section here, which is about the importance and opportunity to access free HUD housing counseling. So one thing I'll say about housing counseling is that it really can be, and I have had clients schedule appointments just to sit down and say, I don't know if I'm ready. I'm not even sure I want to buy a house. But if I wanted to, I'd like to know whether I'm ready or not. And we sit down and we look through the credit report, do a soft pull of a credit report. We review your income and expenses, what you have in savings, and we look at a purchase price that you're thinking about. You might want to purchase a house at this amount, and we plug all those numbers in, and we can get a sense of A, would this be approvable by a mortgage company? And B, would it make sense, right? Would it be affordable to you? Would the payments be affordable? And then you can move forward, and that conversation might be that, hey, you're not ready now, but here are the next steps you need to do to get ready. And I just feel like it's an hour of your time, and you'll walk out of that hour with a kind of a really useful action plan of, here's what I would need to do to move forward on this potential goal. So there's, right now we do mostly virtual appointments and mostly virtual, although we do some phone. And we kind of, once the appointment is over, you always have access to reach back out to me and ask questions, and I can give you better answers because I've actually met with you and I know about your unique situation. And so, I think it's something to definitely take advantage of. It's no cost to you. And it's, I think, very helpful. I know I'm speaking for myself, right? So, but I will say that clients leave those appointments feeling like, they have a better idea of what they need to do and what this is going to look like, and more comfortable about it. So these are kind of the topics that we cover. So credit and debt, budgeting, how you're going to purchase the home maintenance, and then we also do after the fact. So we do support both if things are going well, but you want to meet with a counselor anyway to talk about planning for additions to your home or planning for other issues with your home. Or if times get tough and you do find yourself in a potential pre-foreclosure situation, we can also help counsel you through that and hopefully navigate you to maintaining your home, and maintaining ownership of your home. We do recommend, yes, 6 months to 2 years prior to buying a home. But again, even if you feel like you're 5 years out and you just want to sit down and talk, that's totally fine. These are just some highlights about HUD Housing Counseling. So HUD Housing Counseling has national standards and a certification test, and the providers are local, although there are national agencies that also offer it over the phone. And you can find one at HUD.gov or at consumerfinance.gov. We are a HUD Housing Counseling Agency, like I said. Headquarters is another local housing counseling agency. They're wonderful as well. You know, you should be able to, in the Syracuse area, you should be able to hopefully find and connect with a counselor, and have a session with you. This is another counseling program that is a little more ongoing and one-on-one, although HUD Housing Counseling, of course, is one-on-one. It's called the Financial Empowerment Center, and it's based here in Syracuse. There are many financial empowerment center cities across the country, and Syracuse is one of them. And this offers free one-on-one financial counseling. And this is for anything. It doesn't have to be related to buying a home. It could be related to buying a home, could be long-term planning to buy a home, but it could just be, I want to deal, with my student loan issues, or I want to get better at spending plans and budgeting. The thing about the FEC that I think is really great is that it's sort of a foundational financial counseling. If you working with a financial counselor through the FEC is going to get you the tools and techniques and systems in place that are going to make you more financially stable, whether you choose to pursue homeownership or not. You'll be in much better shape to buy a home should you engage with a counselor. But even if you don't end up buying a home, you'll be in better shape just for your own financial empowerment, right? Financial stability. So it's a really great program, and counselors really care. I'm also a financial empowerment center counselor, so I do kind of both. I kind of ride, I do the HUD Housing Counseling, and I also do general financial counseling through FEC. And I have clients who did HUD Housing Counseling and then connected with an FEC counselor, and they have an ongoing counseling relationship to work on the action plan items that we laid out in the HUD Housing session. So it's really kind of here in Syracuse, we're lucky in that we have a really sort of robust counseling. We have robust counseling resources at our disposal, and you should take advantage of them. So here's how you get connected with them. It's SyracuseFEC.org. Also, the counselors also go through a certification process and pass an exam. And it's operated through home headquarters, but it's the City of Syracuse program, and Cooperative Federal obviously is a member of that coalition. It's a really exciting thing that we have here. Okay, on to shaping up your finances. So these are just some tips. And again, all of these tips can be worked on with an FEC counselor or a HUD housing counselor. So you don't have to feel like, you just take this list and implement it and feel like you're on your own. You can get help with all of these things, but here are just some basics. So you do want to start with a hard budget, one that's realistic, that looks at really where's your money going every month. What money, how much do you have coming in? How much do you have going out realistically? And I would encourage that being backed up by tracking to verify that those numbers are real. So sitting down and laying out the numbers and then tracking to see if those numbers meet up, right? So, as an example, you say that your goal is to spend, no more than say $500 a month on groceries. Track that and see. And I would say I strongly encourage you to keep those categories simple. Don't try to make too many categories. Really, you just want to have categories to track. You build your budget around categories that are ones that you spend money on, like gas, groceries, rent, etc. And then for the ones that are out of pocket that you need to track, I really strongly recommend that you don't try to break down too fine details, right? So you rather than have, for example, I guess a good example of this, right, is like, I think some budgets will have, household items, right? So like paper towels and cleaning supplies and stuff like that. And they'll break out those separately from groceries. I've never understood that because generally speaking, in my experience, I buy those things together and they're in groceries. I don't want to split out a receipt. I want to know, so, and it's not a huge deal to me, whether I don't feel like I'm going to overspend on cleaning supplies. I might overspend on food. And so, it's never been useful to me to split those out. But so I would keep those categories simple. If you don't feel like you have enough money coming in, look at ways to earn more. I know that's easier said than done. So, but again, these are just tips. We can certainly work in more detail on these one-on-one if you want to connect with a counselor. Pay everything on time, especially items that are reported on the credit report. So all your credit card payments, all your student loan payments, car loans, personal loans, anything that's going to be reported in the credit reports. And to be honest, anything else, because many things that go, if, for example, if you miss a payment on your cable bill and it goes into collections, it could go on your credit report. So you really want to try to keep everything paid on time so that when the records are checked to look to see if you qualify for a home, you have a good track record. Look at your credit report. We're going to talk about how to get access to that. But just as by way of introduction, one quick way to do that, look at all three bureaus, not the score, but the reports and what's on the reports and what makes up the score is annualcreditreport.com. So you can go there, access your credit report up until the right now. You can access it weekly for free. That will end in April 2022, but and then it'll be once a year again, at least as far as I can tell. Try to add positive credit history. So if you have no credit cards, it's okay to get a credit card, just don't use the credit card, or use it once a month more accurately, and pay it off in full, right? So keep the balance zero, but use it enough so that it stays active, so they don't close the card. And these items too, we can go into much more detail in a one-on-one session. Here's some signs that you're ready for a mortgage. That you're consistently able to pay your bills on time without borrowing on a credit card or borrowing on a line of credit. Your credit score is pretty good. You're saving some money every month. Doesn't have to be a ton, but saving some money every month. Adequate insurance. So making, you have health insurance, you have, life insurance if you have dependents. Private disability policy is a good thing too, in case you do lose your job due to disability. It's very hard to file for Social Security disability, so having a private policy is good. And then just getting estimates of what the monthly payment will look like and can I afford that? Plugging that number into that budget that you created in the previous step to see, does it work? All right. So, there was one other item that I wanted to touch on there. So the pretty good credit score piece, which I know can kind of be, it's a little vague, right? So pretty good credit scores can be basically, it depends on each lender by lender, right? What your minimum credit score is. But I would say you want to be shooting for 650 or better. And the trouble with that, of course, is that you may be seeing your credit score on Credit Karma, which is going to be quite different from the credit score that their lenders are going to see. So I would say focus on the report and making sure that your credit cards are paid on time, all your loans are paid on time, and your credit card balances are low, less than 30% of their limits. If those two things are in place, if you're consistently paying and have been consistently paying your bills on time, your loans on time for the past 2 years, and you have low balances or no balances on credit cards, your score should be pretty good, good enough probably to qualify for a mortgage. But again, we can talk more detail about that. Okay. The next thing is grow your nest egg. So this is really about the nuts and bolts of buying the home. So before you purchase sorry, this is the nuts and bolts of having the money to buy the home, excuse me, to put together the savings that you need for the home. Before you buy, you end up needing money for the home inspection, which is we strongly recommend that you get a home inspection. It is an important and helpful tool to help make a decision about whether that home is good for you and not going to be a potential problem. You'll also have to pay for an appraisal. So the lender that you are using will ask you to put up funds to pay an appraiser to come out and appraise the value of the home. Assessment is a different type of estimate of the value. You're going to need money for the down payment. So generally speaking, I encourage people to try to save at least 5% of what they expect their purchase price to be. So if it's going to be $100,000 home, you want to save $5,000. That's just easier numbers, right? But you can do a calculation to see what 5% of the number that you want to buy is. And that's after, in addition to money for closing costs. There are grant programs to assist you to purchase for closing costs if you income qualify and qualify based on other criteria. The two major ones here in Syracuse are the Homebuyer Dream Program, which is run through the Federal Home Loan Bank, but it's distributed through banks and credit unions. Cooperative Federal is a Federal Home Loan Bank member and participates in the Homebuyer Dream Program. So that's one grant source. And then there's Home Headquarters has a closing cost assistance program where you can get up to $4,000 towards your closing costs if you income qualify and buy a home in the city of Syracuse and for less than $130,000 as of now. So there's ways to help offset those closing costs and even put money towards down payment, but you do want to, I would say it should be a goal to save at least the minimum down payment of 5%. There are some programs, for example, Home Headquarters has a mortgage that has a 2% down payment. And FHA loans have a 3.5% down payment. So you can do a home loan with less than 5% down. I just say if you shoot for 5, then you'd probably be safe. Most lenders are going to have a product that you can access with 5% down. And then after you buy, you want to have money in savings because you're going to need money for repairs and improvements and maintenance and potential emergencies. So have a nest egg for both of those things. Here's some suggestions for the sources. We talked a little bit about these already. So I say have $2,000 of your own money, right? Depending on what grants you're going to access. You may need a lot more if you can't access those grants for whatever reason. Okay. If you can save your tax refund, great. Any new stimulus, although stimulus seems to be over now, but any new stimulus certainly could be put aside towards those costs. And then grants. So there are grants, like I said, for down payments and down payment and closing costs. And in addition, there is a grant locally, again, if you income qualify in Syracuse from the Empire Housing. And Empire Housing is a not-for-profit that provides grant funds. There's a wait list, so you do need to get on the wait list, but you do need to apply prior to getting your closing on your home. So, and counselors can help navigate all of these things, so you don't, have to know all this stuff off the top of your head. The Empire Housing grants are the kind of thing where you put your name in, you fill out the forms, you put your name in, you buy your home, and then you kind of wait. And then when your number comes up, if you qualify, then you can get a significant chunk of money for home repairs, major home repairs on your home. Just to think about. And again, checking with counselors, it's great. Okay, so Section 8 vouchers. So Section 8 is a HUD program, a Department of Housing and Urban Development program that provides funds for low-income folks to offset some of the cost of high rent. But there is also a component of Section 8. If you are a Section 8 voucher recipient and you choose to and are able to buy a home, then you can actually, for a portion of the time that you owe the mortgage, have the vouchers be applied to your mortgage payment instead of just to rental. And so that's a program that's offered through the Syracuse Housing Authority here in Syracuse. They have their own Section 8 program and Section 8 homeownership program. And so they have their own policies and procedures. But again, counselors could help connect you and get you the information you need about how to take advantage of that program. Onondaga County Community Development and Home Headquarters both buy homes, rehab them, resell them. So those are some options for good quality rehabbed homes that are affordably priced. And then obviously, it's not a bad idea to think about ownership with other family members. You do have to consider how that works should one of the family members want to extract themselves from that plan. But I do think that collective ownership can be a great way to make housing more affordable, and so make home ownership attainable to folks that don't make a lot of money. And then of course gifts are always allowed to assist with down payment if you can get them. You have access to that. All right, so we're moving on to number 5, which is build skills. So this is more about housing counseling and more about the home buying process. Housing counselors can take you through your own action plan about your particular unique situation, but you can also take a home ownership course either through eHome America or through Home Headquarters. Home Headquarters has a Zoom. Home Headquarters offers the eHome course, but they also offer a Zoom-based live taught course for homeownership taught by a certified homeownership counselor or homeownership educator, excuse me, which is a different certification than homeownership counselor. And so that's a way you can learn about different types of mortgages, working with realtors, pre-approvals and purchase offers, inspections, appraisals, concessions, and post-purchase responsibilities. Excuse me. So this is the course certificate may be required for many of the grants that we're talking about. So it's not a bad idea to get that certificate. I will say as a caveat, you do want to, it's not a bad idea to meet with a counselor first for free and see how close you are to homeownership. And if it looks like you're, say, more than 18 months or 2 years away from homeownership, then you might want to wait to take the course and work on other things, work on the getting ready, because some grant programs do, they have a window in which that certificate is good. So for example, the Homebuyer Dream program the certificate is only good for 18 months. So if you think you're further out than that, it might be better to wait and get other things in order and then take the class. But your counselor could give you advice on that as well. Getting pre-approval. So this one is really kind of the first step in the home purchase process. So the counseling and the education can all come before pre-approval. Should all come before pre-approval if possible. And then once you really feel you're ready, then that's the time to put in those applications to get pre-approved. And so basically, and you don't want to start really shopping. You can look at homes and see what pricing is like in the areas you think you want to buy. But don't fall in love with anything before you have pre-approval, because most real estate agents won't work with you until you have a pre-approval in hand from a lender. And it also helps you understand like how realistic are these numbers that I'm thinking that I'd like to buy. You do want to shop around for lenders. You do have, and this is kind of important, the ability to shop as many lenders as you would like within a 2-week period. And each of those lenders may pull your credit, and it would generally be a hard hit for a lender, meaning an inquiry on your report that affected your score. But because there's a carve out, there's a special rule for shopping for a home or shopping for a car. When you apply to multiple lenders for mortgages, they count as one as long as it's done within 2 weeks. So you can shop around without fear that your credit score is going to drop because of all these inquiries that you're getting from these lenders. And so, I would say try to do three different institutions to get quotes for pre-qualification from. Compare them on the basis of their interest rates. They'll tell you what their APR is, their annual percentage rate, and that will give you a sense of which one has the lowest cost mortgage. You might have you might ask to look and see what estimated closing costs look like, other expenses that you might encounter, and compare on the basis of those pieces of information that you gather. All right. So yeah, I think this point is really well taken. So start with the credit union or bank where you already have an account. Relationships do matter. You can ask questions like, look, do you service these mortgages? In other words, if I get my mortgage through you, am I going to make my payments through you, or will they be sold to somebody else and I'll be making payments to somebody else? Just because it's sold doesn't mean they can change the terms of the loan, and it's not generally it's not a bad thing. But if that matters to you, that you want to know the place where you're going to be making your payments, you can have that conversation ahead of time. When you feel like you might encounter, or you're encountering something that seems too good to be true, or you feel like there might be a scam involved, you can definitely bring that stuff to housing counselors, and we can review it and assist you in deciding, what's real and what's not good. These are documents you'll need to apply. So you would just put this together as a packet. The bank statements will just show how much money you have for down payment and closing costs. So, you don't need a bank statement from every bank that you have an account with, only the one where you plan on drawing the funds to put towards the home. It's a good idea if you are a person who has been saving at home. It's a good idea to make a deposit of those funds into a financial institution, at least 2 to 3 months before you're thinking about getting pre-approval, because most lenders want to see 2 months worth of bank statements. And when they see large cash deposits, that can be a trigger for potential concerns and might result in them denying your loan. So best bet, get that money in a savings account so it's sitting in there for 2 months before you apply. This is, so comparing apples to apples. So this is when you have some offers. You don't want to compare, for example, a 3% APR loan with 1% of points, and I'll talk about that in just a second, versus a straight 4% loan. The interest is expressed as an APR. So they're going to tell you, your APR, your annual percentage rate is 4.1%, or but points are fees that you pay in order to get the rate to go down. So, for example, a lender might say, we can offer you a 3.75 interest rate with 1 point. And what that means is that at closing, if you're buying a $100,000 home, you're going to pay $1,000 at closing to buy that 3.75 rate. The only reason why you would do that is if you think paying this money up front to get the lower interest rate, you're going to save that money back over the next however many years you own the home, because you're going to reduce the amount you pay in interest. So that can be really tricky to compare. Again, housing counselors can assist with that. Also, some lenders are going to offer you adjustable rate loans, some fixed rate loans. You don't want to compare an adjustable rate loan to a fixed rate loan because they're two different types of loans. And asking about application costs and closing costs, and getting an estimate of what's my principal, interest, taxes, and insurance payment, what's my full mortgage payment, and comparing on those terms, and then asking about, will I need to have private mortgage insurance? Private mortgage insurance is an insurance policy that protects the lender if you default on the home. So, so just keep in mind that that's a fee that you'll pay per month if you don't put 20% down usually. And it can be dropped off if it can be, once you've paid down. So say, for example, you bought $100,000 home and you put down 5,000. So you started off with a balance of $95,000. You gradually pay it down and you pay it down to $80,000. Well, now the difference between the purchase price and the balance is 20% of the total, right? So you now have 20% equity in the property. You can apply to the lender, request that the lender remove the private mortgage insurance at that point. And then your mortgage payment goes down, which is nice. So finding your home. So you want to go through a checklist. I, as a housing counselor, send a checklist out to folks after we meet for them to think about all of these things that are listed here. Kind of trying to figure out what you need, what's most important, prioritizing things. We encourage you to find a real estate agent. It is not required, but we encourage you to find a buyer's agent to assist you. And we can provide a list of agents that we've worked with in the past. We can't recommend any one particular agent. We're not permitted to do that. But you can ask friends and family to see who they've worked with and what experience they had. And that can be helpful. And you can also look for homes that are for sale by owner. Those might not show up in the listings that are showed by agents. So you do, that can be another channel for discovery of homes. And then really important, like really important, check what the property taxes of the homes you're looking at will be annually. Because and ask for heat bills, utility bills in general, water bills, to see what those costs could be like. Most sellers will provide that information, and it's super useful. And the property taxes obviously is public record, so you can access that, and that's really important because property taxes are generally a pretty big chunk of your mortgage. And so, the smaller they are, the lower that portion is, and therefore the lower your payment. That's good. That's a good thing. Lower property taxes. When you submit an offer, you and your real estate agent are going to figure out what they think the best, what's most likely to be accepted. That's in your price range. That's under the amount you're pre-approved for, or is the amount you've been pre-approved for. And then you're going to submit a purchase contract, which the landlord, the property manager, the real estate agent will have set up for you. And you're going to send in some earnest money. So that's a deposit that you leave with the seller to show that you're serious about the purchase. And so that earnest money goes towards the purchase price of the home, but it's out of pocket. So that's one of the reasons why we want you to have some cash savings, even if you're going to be able to access some grants, because you're going to need that money up front. You're not going to be able to get that from grants. Expect counter offers. Last year, and it's shaping up to be the same this year, or maybe worse this year, where there's just been a lot of bidding on homes and prices get bid up. And that can make it very hard, especially if you have a tight budget and you are only pre-approved up to a certain amount. It can make it hard for you to find the home that you want, and can result in some hurt feelings and some difficulty. And so it's and I don't have a way to, I don't want to sugarcoat that. That can be really difficult for folks to deal with. And so housing counselors can help navigate that. They can't fix that problem 100%. So don't fall in love, even if you put in an offer. We really, again, strongly encourage you to get a home inspection. So make sure that you make sure you're paying for that and getting that done. There is an organization called the National Association of Home Inspectors. Sorry, the American Society of Home Inspectors, ASHI, ASHI.org, and you can go there and plug in your zip code, and that will give you a list of American Society of Home Inspectors certified home inspectors. There's another organization as well. ASHI is the one that I use the most. Very important. I can't overemphasize that. And yeah, to be clear, right, an appraisal is not an inspection. So an appraisal assesses the value of the house. An inspection assesses the condition of the house and potential concerns and pitfalls. So that's what we want. You know, we want to do, we're going to do both. The appraisal will be required by the lender. The inspection is optional, but highly, highly recommended. We're going to talk about closing and beyond. So you're going to make sure you complete all your grant application requirements. You're going to sign the sales contract, get homeowners insurance. You're going to pay out of pocket for that first year homeowners insurance. After that, it'll be included in your monthly payment, but for the first year, you pay it up front. And then you get to closing day and you sign a bunch of paperwork and go over the terms and conditions of your mortgage and get the keys to your home. And it's very exciting and hopefully the beginning of a really great next step in your life. You're a homeowner. Keep in touch with your counselor. Set up automatic payments for various things. So for example, set a budgeted amount for putting money into a savings for home repairs. Set a budget amount for your for maintenance, for replacement of appliances. And these are things you can talk through with your counselor. And you can often set up sub-accounts. Like if you were a member of a credit union like Cooperative Federal, you could set up sub-accounts for these different things and label them. So this is my appliance fund. This is my home repair fund. This is my, you know, whatever other things you think you should be saving for fund. And you can work on that with your counselor as well. If you're gonna have trouble making your payments, contact your lender, contact the housing counselor, see if you can get some assistance. I can't emphasize the communication point more or enough. It's you know, it's always better to communicate and let the lenders know what's going on. There may be programs available. The pandemic is a good example of that, right? So lots of folks were lost income and there were programs available to stop monthly payments on mortgages for 6 months or even a year. But you had to know about them and you had to apply and you had to speak to your lender and you had to continue to communicate with the lender. And in some cases, you needed to work with a housing counselor because the lender wasn't doing the right thing. And you needed the housing counselor to help you get them to do the right thing. So it's really important for you to keep those lines of communication open, both with the lender and with housing counselors. So as a next step after this, if you want to head over to coopfed.org/home base, you can make an appointment there and with me as a housing counselor, and you can it's a Zoom appointment, or a phone appointment, and we have hours and evenings. If you want to do an evening appointment that works for your schedule, and we can, you know, start the process of putting together a plan for your home. And you can also reach out to me, this contact information. If you have other questions, you want to ask me anything about how homeownership or plan for purchase or anything at all. I hope you enjoyed this presentation. I hope this is giving you information that's been useful to you, and please feel free to reach out. Thanks a lot.